Hi, good morning. I'm Sunil Jain. I'm the opinion editor of the Financial Express. Thursday is the big day for the union budget. So what are we looking at and what aren't we looking at? I mean, what are we expecting? What are we somewhat uncertain about? And what are the almost the near certainties that the finance minister is going to deliver? Well, to begin with, the backdrop is bad news. We're talking about a 5.5% GDP this year. So we're talking about a GDP collapse. We're talking about an IIP and industrial production at almost a decade low. We're looking at investment levels, project starts, the number of projects stalled. We're looking at all of these are probably the worst that we've seen, since FY08, which is really the golden year. So, in a situation like this, what exactly does Mr. Chidambaram want to do? One, very clearly, the first thing that he wants to do, he wants to get growth back up. So we're talking about 5.5% this year. Some people are talking about maybe 7 this year. I mean, in FY14, what looks more likely is about 6 to 6.5% for the year. So really, what are the big challenges that Mr. Chidambaram has? The big challenges, as always, are getting the taxes up. We've got a tax to GDP rate which is down because of the slowdown in growth. So there's nothing Mr. Chidambaram can do about that. And what Mr. Chidambaram needs to do is that we've seen a huge fall in household savings last year. And the most important, we saw a greater increase in household savings being put into gold and real estate. So Mr. Chidambaram needs to, A, get savings up, which he can't do. But more important, he needs to reverse the balance away from the gold and real estate, which is something that he's going to do. So I'd say I put my money on a big change in the ATC tax exemption. You will probably see an increase in the amount of exemptions that he can give. You might have some specific ones for insurance and things like that, but certainly there will be an increase in the numbers in the tax incentives that we'll get for the ATC. I think that's certainly going to happen. In terms of the actual numbers themselves, we are looking at a 5.3% fiscal deficit to GDP ratio this time in FY13. The FY14 numbers, Mr. Chidambaram has already told us, are going to be 4.8%. So the way that he will do that is he will make a dramatic freeze in expenditure levels. So I think what our reporters in Financial Express have been telling us for the last few weeks is that we may actually find the total expenditure levels for FY14 being pegged at exactly the number they are likely to be in FY13. So that's a big thing. In a sense, it's going to be a zero growth budget in terms of the expenditure. That's going to be a very, very major step. I think that's what we're certainly going to see. We're going to see an increase in the disinvestment levels. There are shares of Suti to be sold. There are the shares of Anil Agarwal, the Balco, the disinvestment, the residual shares, there's that to happen. So you'll find more disinvestment. I think that's a good part. The bad part about the budget, or the frightening part of the budget, we're hoping it won't be too frightening, is the fact that you will have a food security bill. So this food security bill gives food to 75% of Indians at a subsidized rate. Mr. Chidambaram's challenge, the Prime Minister's challenge, will be to get the food security bill off the ground, but try and keep it in a staggered manner. So maybe introduce a food security bill maybe for 50 districts in the country, maybe 75. So that will be the big challenge. I think the big announcement that we'll certainly see a movement on an announcement on the date for the goods and service tax. And that, as we know, is one of the biggest reforms that India is going to have for a long time. So when it's fully rolled out, the goods and service tax will actually mean that the effective tax rate for all of us, whether we're paying an excise duty or a service tax or a sales tax or what is called a VAT now, so we're seeing that rate will come down by about 1 to 2 percentage points, which is a big thing. I think the budget, sadly, for people like me who earn a lot of money, we will probably see a surcharge on the rich. I don't know what that amount is, but hopefully it'll be above my income, but it may also just include my income. So we'll see a surcharge on the rich. I think what we don't know, those are the equally big imponderables. What don't we know? What are we looking for? What are we unlikely to see? Or what are we not so certain to see? We are unlikely to see the finance minister making any big announcement on the use of Aadhaar or Nandan Nilikani's program to deliver subsidies on LPG or on kerosene. I think that's a big negative, but unfortunately we're going to see that. We're certainly not going to see Aadhaar being used for delivering PDS supplies, which is a big negative. And the reason why that's not going to happen is that the government is just rolling out a food security bill. So you cannot have the government giving out more food subsidies in terms of grain, and then at the same time trying to give them out in cash. So we are not going to see Aadhaar, for cash. I mean, for LPG or kerosene, or certainly not for food. I think one of the big imponderables, and this is going to be a big disappointment to industry, the finance minister is not going to make any announcement withdrawing the retrospective tax that Mr. Pranab Mukherjee brought in last year. The retrospective tax, as you know, is a tax which allowed the government to tax Vodafone, even though Vodafone had won the tax judgment in the Supreme Court. This caused a huge problem. FII inflows to India slowed down dramatically that month and for the next month. It's when Mr. Chidambaram came in that people got the hope that he would he would withdraw the tax. He got a committee set up which said he should withdraw the tax. But I think the budget, the tax numbers are just too bad for Mr. Chidambaram to be able to do that. I don't think he's going to make much of a statement in terms of resolving the transfer pricing share issue that will come up in the context of Nokia. We saw the Shell chairperson Yasmin Mehta make a big statement about how she thought the tax demands on Shell were arbitrary and ridiculous, and she would question them. There have been a lot of tax demands like that. I am not too sure that the finance minister can do anything on that. So I think there are two questions here. One, what are individuals like us looking for, and what is industry looking for? If you're looking at individuals, I already talked about the fact that we'll get more ATC benefits. I don't think the finance minister is actually going to increase the standard deduction limits because he wants to keep a certain number of taxpayers there. But I'd be very surprised if something like that happened, if there was a change in the deduction, if you're going to increase the standard deduction limit. But you will certainly see ATC benefits. If you're looking at what industry is looking for, as I was saying, that industry is going to be looking at the direction of the budget, which means that is this a budget which is trying to curb expenditure? Yes, it will be a budget which will curb expenditure. Is this a budget which is going to fix the problems of the taxman in terms of the retrospective tax or the transfer payments? I don't think that the budget can do much on this. It will promise something, but it's not going to be able to do much. The tax situation is just way too bad. Is this then the next thing that industry is looking for is really what's going to happen to investment levels. Is the finance minister going to be able to kickstart investments or project clearances? That's not strictly within the finance minister's domain, but certainly during the course of the year, industry is looking for a more active cabinet committee on investment, actually driven by the finance minister, because he's the person whose idea this was. And people are looking at more clearances, whether it's for coal mines, whether it's for for oil blocks that have got stuck in the defense ministry clearance. Just one last word here. I think we need to keep in mind, be a bit positive about the Cabinet Committee on Investments. Over the last few days, we've seen Cairn Energy announce a $1 billion investment program because the government of India actually gave it clearance for continuous exploration, which it has been asking for years. So they got that clearance about a couple of weeks ago. We heard about Reliance and BP going and meeting the minister and saying that they're going to be investing $5 billion over a period of time on fresh exploration in the KG Basin, once again because the government gave that clearance on continuous exploration. So we are seeing some action on the Cabinet Committee on Investments, and I think industry is going to be looking forward for more of that happening during the year. I think the budget is going to be a good signal, not in terms of what it can achieve, but in terms of the direction. The imponderables there are extension of Aadhaar, the transfer pricing and retrospective tax, and of course, I'm afraid, the food security bill. Thank you. We'll be with you on Thursday.
One question, Sunil. That was great. Would you say anything about whether the next year's general elections are going to impact this budget in any way?
Well, the point is that it's very, very clear that whether we have election in September, the way Mulayam Singh Yadav seems to believe, and the way he's told his party to be ready for, or whether we have them, on schedule, the elections are very much there on everybody's mind. But I think the reason why I'm not too worried about the elections is there's simple maths about it. You cannot go into an election with a 5% GDP and an 8% inflation growth there. So whether Mr. Chidambaram, whether the Prime Minister, whether Sonia Gandhi likes it or not, the government has to fix the economy. I think that's the task of the Finance Minister. So there will be some amount of, as they say, feeding the beast, which is a food security bill. There will be some going back on petroleum subsidies, in the sense that I don't think the oil companies are going to be raising diesel prices by 50 paisa every month for the next 12 to 14 months. So there will be some back and forth, but the overall direction has to be in one way, which is a positive thing.